if you owe somewhere in the range of that threshold, $66,000 for 2026, and that's the reason why your passport gets frozen. This is where people get this whole situation about passport revocation wrong. They assume that the balance on the notice is the truth. Often it's defensible to bring that number down substantially. And we can do that by, most people don't know that the IRS can actually stretch out their hand and reach your passport. Here's how it starts. The letter shows up. It's called letter CP508C. And that one letter says, in plain English, as simply as I can say it, that the IRS has certified your tax debt to the State Department, who allows you to renew your passport, as seriously delinquent. What is that number for 2026? $66,000. So now that word, certified, that's doing a lot of work, because once that certification goes through, the State Department is generally not going to issue you a new passport. And I know firsthand, not from myself, but from clients, they're not going to let you renew your passport either. Because, let's face it, if you want to travel internationally, in some cases, they can revoke the one that's already in your pocket. And here's the part that catches people off guard. And I mean this. It's not a judgment call. Nobody at the IRS sat down and then glanced at your file and says, you know, maybe this is seriously delinquent. We should call the State Department. Because your balance crossed a certain threshold. Certain boxes were checked. This is all systematic. It's all in part of a framework. And that computer sent your name over. End of story. That is the end of the story. It's all procedural, nothing personal, which is good news, because procedural things can be unwound procedure. Stay with me on this, because here's where people get things wrong. They hear the word passport, and they hear passport revocation, and they assume it applies to anyone who owes the IRS anything, and it doesn't. The law sets a threshold. That threshold adjusts every year for inflation. So, like I said, for 2026, that number is at $66,000. Last year, 2025, it was $64,000. But the part that most people miss is that not $60,000 in tax. It has to do with seriously delinquent tax debt. So if you owe tax that has penalties, and on top of those penalties is more interest, that all molds together like butter and sugar and flour in a chocolate chip cookie to be tax. It's inseparable. So picture a contractor who maybe didn't file for several years. The actual tax might have been, 30-something thousand. However, the Internal Revenue Code has these things like failure to file penalties, failure to pay penalties. And like I said earlier, interest on top of all of it. And now that balance for that one contractor who thought he owed $30,000 crossed that seriously delinquent threshold without the underlying tax ever getting close to it. And that's because interest is compounded at 8% compounded daily. And there's a second requirement, and this one matters. The IRS generally can't certify you just because you owe. There have to have been taken some collections actions, like they filed a notice of federal tax lien, where your rights to a hearing, and it's called a collection due process hearing, have lapsed. Or they could have issued a levy to you. That could have done it. In other words, by the time your passport is in play for your taxes, the collection machine has already been running for a long while. So how does this get fixed? There's a defined path to get out of this mess. And the only way to do it is through reaching people who need to hear the right word. And it's more reachable than people expect. The certification gets reversed when the debt stops being seriously delinquent. And the law spells out exactly how that happens. Option 1, pay it in full. Well, that's not really realistic for most people, because most people can't. But that's perfectly fine, because that's not the only door for you to exit. You can also enter into what they call an installment agreement with the IRS. Now, that installment with the IRS doesn't have to be paid in full for your passport to be released. You just have to make 3 payments. You could also get an offer and compromise accepted, even pending in some cases, but that's going to take 12 to 14 months. You can request certain hearings you're entitled to, like a collection due process hearing. There are also some exclusions that you have to keep in mind. Situations the IRS generally won't certify the passport or the tax debt to be seriously delinquent in the first place. Like if you're a person with an account in hardship status. And how do you do that? Well, you have to assert that. Notice, what every one of these things has in common is their agreements, formal agreements. The passport doesn't just come back because you promised to deal with it. You have to do something formally on paper, and that usually has to do with your finance. It comes back because you documented resolution through an IRS agreement. And here's the piece of true urgency. No drama needed. Once the reversal happens, the IRS is supposed to notify the State Department. Notice I said supposed to, within 30 days. Now, there's an expedited path that costs you a little money if you have imminent travel and you can document it. But you're not going to go through the usual channels for an expedited travel arrangement. But that clock starts when the agreement is in place, not just with a quick phone call. So you got to put things into perspective. The real question is how fast you can get into a resolution case that the IRS is going to accept. Because let's face it, they don't accept a resolution agreement from just anybody. For somebody who has unfiled returns, that means returns first. The most recent 3 years e-filed, any 3 years before that, paper file. So here's what to do. Step by step. First things first, find out where you stand with the IRS. So if you've gotten a CP 508C or a lien notice, or if you're really aware, you know you've got unfiled tax return, get taken care of. Or maybe a balance due that's maybe at or near that threshold of $66,000 for 26. Get your IRS transcript pulled and look at the real numbers. If you don't know how to read those transcripts, they're not really scary, but don't be afraid of the numbers. Look for the real ones. Second, and if there are any unfiled returns, there's probably a substitute for return. Those things come first. So you have to create accurate, defensible, reconstructed records if that's what it takes. That's frequently where the balance itself comes down, so it's no longer seriously delinquent. And 3, get into a formal resolution plan with the IRS. Everybody's tax situation is unique and different, so you want to get into the right one for your situation. Not the first one that the phone line tells you to. Settle for less with the IRS, okay? Make a plan. I'm Josh Wiskowski. I'm an enrolled agent. I'm licensed to sit before the U.S. Tax Court, and this is the kind of work that I do on a regular basis, particularly reconstructing records, making your numbers defensible in front of the IRS. And the way I do that is by helping people get back on track and in good standing with the system that runs on procedure automatically without anybody lifting a finger. So if this is your situation, the balance, the letters, maybe the passport, the first step in a case like that is just get an evaluation. I got a link in the bio underneath here. We're going to look at transcripts, ask you some questions about your facts, and map things out for you. No pressure, no drama, no obligation. Just give you the actual picture. Like I said, the link's below.